So it looks like we're going to have a rate cut this week. Now, it's a huge moment for Bitcoin, potentially the S&P, the Nasdaq, and probably the dollar. And this is the first rate cut we've had in 2025. And it could actually set the tone for Q4 and beyond. So just be mindful of the short-term risk on elements, but also potential long-term risk off. Now, today I'm going to break down what it means and what the likely outcomes are for the Federal Reserve. So try not to fall into the clickbait on X of people faking numbers and skewing the data and making photoshops of certain things. So just be mindful of that. If you enjoy this sort of stuff, please do leave a like and comment what you think. 50 base points, 25 base points, or nothing. Let me know. Now then, on the screen, I know it's a bit wibbly wobbly, but here we are. Why rate cuts matter. Now, as I just alluded to it, we've not had a one since December. Okay, the likelihood of this happening is pretty high, of a 25 base points, which is fine. But why does this matter? And let's go through it in simplistic terminology. So basically, with it going down, it would indicate that liquidity could flow back into the system because borrowing will get a little bit cheaper. Not by much, but a little bit. And risk assets tend to fly, especially if it is in the right environment. Remember that word, environment. Now, because of this cycle is a little bit different in my viewpoint, inflation's a little bit sticky and it has become a little bit problematic with the data and stuff. The Fed have been a little bit cautious, but I think, in my personal viewpoint, Powell's done a great job. He hasn't, thrown the baby out the bathwater, so to speak, and he's kind of kept it on par. It hasn't been a crazy kind of volatile period for the S&P. It's been actually quite good. So it hasn't been, as I say, terrible, but realistically, I think if it is a 50 base points, it will probably create a lot of problems longer term. So I do think 25 base points is going to be really, really good. But we need to talk about the three scenarios. So firstly, the base case is this. This has got the highest probability of about 95% certainty, whatever, of doing this sort of thing. So what this is telling us, realistically, is it's going to ease it in for the cycle, so to speak, because it's not an explosive thing, right? Realistically, this is a signal to tell us that they are expecting risk on sentiment to improve, i.e. the data is good. We haven't got horrendous unemployment. We haven't got issues around the job market that are really kind of signaling for a recession. That is where we need to come into this in a different sort of terminology in a way, because rate cuts in a crisis would equal risk off. In terms of what we're aiming to achieve, it's okay, the market, so to speak. A risk on environment would indicate the rate cut, which is important. Now, scenario 2 would probably shock the market in my viewpoint. It's not bullish, maybe short-term risk on, but longer-term problems. This would indicate that the Fed is worried about something a little bit deeper, maybe an economic slowdown, maybe a financial bit of distress or stress in the short term. Yes, Bitcoin could rip higher, liquidity would kind of explode a little bit and surge, but more to the point is it's telling us that the economy is probably weaker and they need to act. I don't want a 50 base points cut, just saying, I want a 25 base cut, but we'll see. Now, I find this unlikely, but there is a scenario 3 of a no cut, which would be hawkish as fuck, just saying. It'd be a curveball, and it would probably give dollar strength, and it probably would make equities absolutely shit themselves, just saying. Because, in my viewpoint with this, it would just delay the inevitable. And I think keeping, rates higher for longer is probably going to break. I think that's unlikely, but we'll see. You never know. So yeah, that's the obvious in the room. But as I say, and I posted this on my X about it, and let me just show you. So this is what I put on my X. It's quite simple. Basically, cheaper money, weaker USD, liquidity flows into, obviously, the likes of BTC, gold, stocks, whatever. Obviously, the problem is that second big sentence, if cuts equal crisis. Do we equal crisis? I don't think we do. So I think we're all right. But as I've alluded to it, 94.2% currently is the base case for a 25 base points. But that keeps changing, okay? But right now, as you can see at the bottom here, it has been changing. Currently, it's all right. Now, let's talk about Bitcoin. Let's talk about the obvious data in the room, which is profitable days of Bitcoin, right? And I know everyone on my channel likes altcoins too. Some people like Bitcoin, some people don't. But ultimately, Bitcoin needs to be the thing that reacts the most to allow that drip feed and that rotation, right? Most people who are holding Bitcoin are doing all right. The thing is, right, even with this uncertainty around rate cuts, are we going to get 25, 50 or nothing, whatever, the inflows have been relatively strong over the last week or so. That is hugely important. Obviously, we could talk about how September's a bit shit. Now, it isn't shit, it's just a bit wishy-washy and a bit of a lull because of these decisions and because of how the market is kind of made up with Q4 risk on, with Q1 with risk off a little bit with tax season, and obviously in between with holiday season and whatnot. We will do some technical analysis, but the big thing here, the bigger, broader picture is September could actually ignite the entire market completely if the decision is positive, if the markets react well, and if no one, i.e. Donald Trump, doesn't do anything stupid. So when we talk about the likes of Bitcoin, for example here, right, this is a bit of a messy chart, I understand that, but we are looking, I think, all right, nothing too crazy. We have kind of, I would say, ishy, kind of wishy-washy, kind of struggling to get above this level, which is fine. But ultimately, this is the area for me, $116,000 we need to break to change character to continue going higher. It feels very, very interesting to see how we have probably created a potential bottom here, pulled up, pulled back, made a new impulse up here. Are we going to pull back down a little bit right before Wednesday to go up to the upside, right? That's kind of where I'm looking at in terms of this. So if you're following it like this, that's an obvious impulse wave. Are we going to pull back? And is the next wave going to be up here? Potentially, yes, if the decision is okay. Problem is, it may not be. It might well throw a spanner in the works, or it may well do the complete polar opposite, which could be an issue. And obviously, yes, we are in the bullish zone here on the RSI. It's looking a bit better. We are above the EMAs. We are looking better structure-wise. We have changed character. But for me, this $116,000 level, $117,000 level is absolutely critical for further upside. Now, let's talk about the broader market, the dollar. We'll talk about the S&P and the NASDAQ and stuff in a minute, but with the rate cut incoming, right? I've just made a dot on my screen. Go away. Buy. There we go. So, this is important to note for obvious reasons. This is 97.52%, give or take, around that kind of level. This could get interesting in terms of where we go next, because obviously this is in a honking downtrend. It kind of deviated up and now it looks like it's on its way down. More often than not, you're probably going to find that we're going to go and readdress this low if the rate cut comes in, because it's going to weaken the dollar a little bit, and that will increase strength elsewhere with risk on assets, which is absolutely fine with me. Now, with the likes of the FX market and the NASDAQ, the FTSE, S&P, whatever, right? Insert equity here. We are flying up still. Now, the ultimate question is, now let's just remove some of this noise, by the way, because it's a bit messy. Where do we go next? That's the thing. We are at blue sky breakouts. We are flying up to the upside. We've had the tariff kind of sell off and we're melting up. The question is, do we believe we are entering a recession in the next year or so? Potentially, yes, if things get a bit ugly. Tariffs will probably increase inflation a little bit. We do need to do some rate cuts at some point anyway, just regardless of the market, because it needs to change a little bit. But what happens next? That's the ultimate question. We don't know, right? We don't know. But realistically, we could be looking at where this can be going. In my viewpoint, the S&P, the NASDAQ, it's very, very, in my viewpoint, euphoric. It's very, very crazy. And that's the thing. Like, even the Russell 2000 is looking very, very interesting. If we break above this, the all-time highs, are we going to see an alt season potentially? That could be interesting. As I said before, the NASDAQ is still at the all-time highs. This is going mental. It really is. I know Bitcoin's at 116,000 or 114,000, whatever. But where is the euphoric of that? We don't know yet. But like I say, we've got the situation where the dollar could be dropping. Gold is flying as well, by the way, just saying. So there's all these kind of factors in play. Why is gold flying? Why is gold doing this? Why is the NASDAQ doing what it's doing? Why is the Russell flying? It makes you wonder something's priced in. It's happening, right? So just be mindful of that as well. So the fundamentals are very interesting, but realistically, a lot of people, and I know you're in the comments going, well, what about my altcoins? Well, let's talk about the broader picture with these, because the problem we have with altcoins, it is technically, on that basis, an alt season. You're probably looking at your portfolio going, no, it's not. But it's because of one situation. there is a lot of coins on the top 50 that have outperformed Bitcoin over the last 90 days. Why? Bitcoin's been pretty sideways and pretty lullish. Most altcoins have popped up a little bit. You can see here the likes of, what was it? Mantle, ENA, Crow, obviously Pengu. You know, you've got Ethereum, Link, Doge, AVAX, XLM, Cardano, BNB, XRP. It goes on and on and on. They're all big assets, right? They're all outperformed it. That is why this data is saying that. But in terms of your portfolio, you're looking at your coins going, well, it hasn't done anything. But ultimately, this is why I say you got to have the rotation. Bitcoin, Ethereum, Solana, probably XRP, and then it will flow downhill from that point. Just be mindful of it. It doesn't always mean boom, especially on altcoins, especially if people are attached to their bigger assets, because bigger money is in those assets now. Ethereum's doing well with the ETFs now. Obviously, Solana is going to get some ETFs incoming. XRP's got applications galore, so is Dogecoin. The Bitcoin ETF, as I showed before, is doing very, very well. By the way, if you are interested in following me with more, videos, 2-hour plus content extra a week, or my journals, my DCA challenge, whatever, jump in Patreon. It will help you a lot in terms of what I am actually doing. I am a positional holder. I've been in Bitcoin for a while. I don't have to jump out at any point. As I say, targets are much higher, but the fundamentals are very, very clear. What if this fails? What if this is a top? I probably will talk about that in one of my videos in the not too distant future, because I think people are getting a little bit panicky, especially on the downward days. And I think that's okay to kind of panic about that. But the reality is there may be pain if things don't happen, or if it doesn't happen fast enough, or if certain things are said by Powell or Trump or whoever, incoming random message from a senator at some point. The situation is the S&P is flying, the NASDAQ is flying, Bitcoin's done very well, gold is flying. Is this the final rotation? I think yes. So just don't be too scared about, taking profit at certain points. Obviously, if you are banking on your altcoins to do well, be selective. Don't get too greedy, because it may never come around. If you are looking for a place to trade and you are in the UK, this is a great place to be. I know most things are locked out in the UK, but Blowfin's a good one, and it will allow you to trade the market properly. So there we go. Let me know what you guys think. Will the Fed do what they expect it to do in terms of a 25 basis point cut or 50? And what do you think? What do you think the market will do in terms of its reaction? Keen to know. And if you found this useful, please do slap a like and a subscribe on the video. It's free to do so, and it means an awful lot.